Hey everyone, it's Ryan Newman with Remax Select here with Chris McCorkle from Case and Home Loans today. Just go over a few tips and things you may need to know in the home buying process for the first-time home buyer. So again, welcome Chris. Thanks for taking the time out of your day to do this video. So first-time home buyer, I'll be in contact with them. I send them over to you. What does that initial conversation look like when you're talking to that client?
Yeah, absolutely. The first thing that we do is really kind of get a feel for what the client is looking for, making sure what their comfortable monthly payment is going to look like.
Absolutely.
What type of loan program is going to best fit them, and usually that conversation works itself out in such a way that it becomes obvious which loan program best fits the buyer.
Sure.
But the things that we would need right up front in the process are going to be simple things like your W-2s from your most recent 2 years,
Okay.
your federal tax returns from your most recent 2 years, pay stubs from the most recent 30 days.
Okay.
These types of items, so that we can kind of get a real feel for how much money does the client make, and then we would ask a series of questions which would allow us to be able to pull their credit report and find out how much debt they have on a monthly basis.
Absolutely.
That's going to help us know pretty quickly what they're going to be able to afford, how much money they can do in a home loan.
Perfect. So as we're heading into tax season right now, you mentioned W-2s. Does a client need to wait to get their taxes done from 2015 in order to start that home buying process, or can they start now and just use the 2 previous years?
Very good question. Yeah, they could start right now. Up until April 15th, I mean, we're not even going to require, that they give us their newest, 2015, other than their W-2, because that's going to be available.
Yes.
But they don't have to get their taxes done until April 15th.
Okay.
So we're not going to require that they turn those in.
Yeah, I feel some people may be waiting to get that done, and at that point, we're getting through that spring market, that heat of the market.
Right.
So, real quick, can you talk on how important it is to have that pre-approval prior to viewing homes?
It's very important because, for one thing, the client really wants to know, how much is this house going to cost me? Not just I'm looking at houses that are $200,000 or $250,000, but how much is that in a monthly payment? And is the customer really comfortable with that payment, so that they can know if that's the right house for them?
Yeah.
So it's really important for them just to have a handle on, if my taxes are this much, if my insurance costs this much, and my house payment's this much, this is what I'm going to be looking at for a monthly payment.
Perfect, absolutely. And certainly it helps on my end, having a pre-approved buyer when it comes to negotiation. We're out there showing houses, and a lot of houses are on the market 24 to 48 hours before offers are being submitted.
Right.
So it's nice to have that back end work done, having that pre-approval. So real quick, can we just talk about different types of loans? I know there's a lot of jargon out there, RD, FHA, VA. Just real quick, can we touch on what types of loans there are, and what kind of people would qualify for a particular type of loan?
Absolutely. So, I mean, I would start with, let's start with the RD loan, because it's a 0% down program. So we'll start there. It's a low down payment program.
And RD is?
It's short for rural development.
Okay.
It's a USDA loan, so it's a government loan. It's for rural areas. So, we would check the zip code to make sure it qualifies.
Absolutely.
There also are some income limitations on that program. So if someone makes too much money, the good news is they make a lot of money.
Yeah.
The bad news is they wouldn't qualify for the program.
Right.
So, but it is a low down payment program for low to moderate income families.
Perfect.
And when I say that, I mean, you can make $78,000, depending on the county, depending on how many children you have. I've done loans for people that make almost $100,000, and they still can get a RD loan, just depending on where they're at, how many people are in their family.
Absolutely.
So that's a great loan program if you're wanting to go low down payment.
Okay.
Another low down payment program, which would be beneficial to some buyers, would be the VA program, Veterans Administration.
Okay.
So if you're a military, past military home buyer, you can use that program. It's a great program for veterans.
So does that work for active duty members as well?
Yes.
Okay, so active and retired.
Active and retired.
Okay.
Yep. And we would just get proper documentation to show that they were in the military and things like that. That's all stuff I'll ask them for and walk them right through that process. It's a very good loan program if you qualify for it, because there is no private mortgage insurance on a VA loan.
Okay.
There's some real advantages that besides zero down, there's some real advantages that you get because of the service you've had in the country. So it's a really great loan program.
Wonderful.
So another great loan program, Ryan, would be an FHA loan. It's a great loan program. It's still a low down payment program. It's 3.5% down is your minimum down payment. It's a great loan program if someone has had some history with their credit, as many borrowers have. Obviously, bad things happen to good people, and maybe they've had a foreclosure, a bankruptcy, just some things happen, hiccups in their credit in the past, we can get them through with that program really well. So it's a great loan program as well.
Right.
Another great loan program would be your conventional loan. This is going to be your higher credit score borrower. This is going to be your person that has a little bit more money in the bank, a little more that they can put down on the home. Some buyers want to put as much as 20% down. That keeps them from having to pay PMI insurance and things like that. Yeah. But you can go as little as 3% down on a conventional, 5%, 10%, 20%. That's typically the progression that you have there. And there's a lot of different reasons why a buyer might choose to do one or the other on all of those. So usually I like to just kind of walk through with that buyer what's more important to them, putting the down payment down and liquidating their cash. Some people value liquid cash more, so they want to have that in their bank. They don't want to liquidate everything, but they still want to have the advantage of a conventional mortgage. So it just depends on what they want to do.
Great. So we get the buyer pre-approved. We're out there looking for homes. What should they not be doing to have any kind of hiccups throughout the loan process? Once we found them a house, we got an accepted offer.
Right.
I guess where's the next step with the buyer? Obviously, we order appraisal and things like that, but what should they not be doing during that time to offset the loan pre-approval?
Exactly. Great question. One of the things that I always tell people is, avoid putting money into your bank account that's non-payroll deposits. So in other words, mom and dad gave you $1,000 for Christmas. Don't take the $1,000 and put it in your bank account, because now we're gonna have to explain where did the money come from, and a lot of extra paperwork that the client's gonna have to go through if they do something like that. If they're a buyer that maybe has cash on the side, how some people will have like a safe at home with cash in it, and they might think to themselves, I'd like to use this towards the purchase of my house. I usually talk with them about that and say, use that money to pay for your daily living expenses, your gas, your groceries, just everything that you're going to pay for, and let your payroll deposits continue to come into your bank account and just continue to accumulate. That way, you're not taking from your bank account to pay for those things and trying to put cash in after, because it won't work. We're not going to be able to do that. Another thing that they really want to avoid, it's an exciting time. You're buying a house, you're wanting to get furniture, you might want to get new appliances. Right. Best Buy might have a zero down program, and you might have a perfect thing happening, and just avoid taking out any new debt, any new credit. You don't want to have your credit pulled. You don't want to, get your perfect refrigerator and things like that. Let's just wait for those things until after we close.
Or use that cash that you have saved in the safe.
Exactly.
Just so avoid anything with your credit. So
exactly.
Don't be going out and buying a new car, new fridge, new furniture.
Absolutely.
Again, Chris, I want to thank you for your time answering questions and maybe helping someone that's new to the home buying process with the financing side. Again, Chris McCorkle from Case and Home Loans. His contact information will be available at the end of this video should you have any questions. Thanks for watching. We'll see you next time.